Okay, pretty sure we're live. Let me just double check. Oh, here's August 1. Okay, so okay, we're live with that. Okay, so let's go over today's framework, even though it's basically just a repeating of what happened over the week. So you guys missed the video template. Here it is. I was looking for a manipulation movement to here, and there was some complications with this, and I will get into it right now. But here, if you want to see what I was looking for this week. Okay, so the first thing I want to know is Tuesday's price action. So what happened here is previous week on Thursday with this high here, which was a really dominant high. Uh, I mean prominent, not dominant. It was a pretty prominent high because it was an inside high, and since Friday was an inside day, so it remained within the parameters of Thursday. That means that this day holds also liquidity at its low and at its high. As you can see from the streak here, or maybe about a move higher. Pay attention to the framework here, and you can see that within this highlighted volume imbalance, what happened is we had the run into it, and then we had a run away from it that fell short of the buy side liquidity. Keep this run higher here after this retrace into the volume imbalance. Keep it in your mind. After this run lower and then run higher, we have the low, high, and then lower low. Once we got this lower low into the volume imbalance on Tuesday, then I was looking for this move higher to be into Thursday's high. And then when I saw this happening, I was saying, wait a minute, this run here, this failure from here, actually kind of makes sense. It seems that it was preparing a manipulation move because the run into the volume imbalance and getting immediately running into the nested high into this buy side group and into a 4-hour imbalance wouldn't make much sense. It would make more sense if we had initially run into it, a run away from it and falling short from the array, running lower, sweeping this low here, and then start trading higher and engulf this lower move here. And then if we still continue to be bullish, then this move lower here would be used as an order block. But notice what happens here. Um, remember when I said to pay attention to this run higher? Pay attention to this run higher now. We have a run higher, falls short of the buy side liquidity pool. This here becomes a failure swing. We have a run lower, so a high, low. The low is into a volume imbalance, into this old low, which we noted was significant. Why? Because it was A's low. A's low of a breaker. So the low, high, lower low. This low here was being taken by a lower low on another breaker. So it's perfect breaker foundation within this price action leg here, price action segment here. Anyway, after this run lower, I expected this run lower here to be engulfed quickly within this run higher here. So I think that's why price saw a little bit of urgency to run overnight and give us bad price action in the AM and the PM, which wasn't necessarily bad. It was just not favorable. Okay, so I guess what I'm trying to say is that we have this run higher here, run lower, so high, low. Now we have a higher high, and the higher high of each breaker of each bearish breaker is obviously what the manipulation leg. So this manipulation leg moves into what? First of all, it moves into this nested high, moves into a 4-hour imbalance, and also moves into an equilibrium here. Profile equilibrium 0.5 level of the previous range line. And this happens from Wednesday until today, Thursday. Now, another thing I want to point out is how I want this move here to get engulfed quickly. And yesterday, when I saw it hanging around this level here, I was thinking, it's probably not going to do that because of if we did want to engulf this move higher here, then it would have done it with speed and it would have done it without hesitation. But I think what it might have been waiting for was for the next day's open. Notice next day's open, how it opened here, created a new day opening gap, which we completely filled. So here, if we go on the 4 hour, the new day opening gap was around here. And you can see price completely filled that and disrespected it as a new day opening gap. So that's one bullish array disrespected. Another thing I want to point out here is the equilibrium level. I was anticipating the equilibrium to be filled, and I wanted to see how price would react to this. So going today, I will only be looking for shorts, looking to see this run higher here to be fully engulfed and close below, and hopefully we can start seeing more prices towards this low here. So overall, the output that I created a couple of days ago, it was the framework was correct, but the way that it happened was not favorable. It only made sense. Price only to know what it was trying to do after Tuesday. Once we got this run lower here and got the sweep, and then I got this new manipulation leg, another manipulation leg, there's a second phase manipulation, and we have this sweep of this negation and this failure swing, and a top of a higher time frame key level. Then we can start expecting moves lower. And I expect this whole leg here to be filled. And you can see prices heavily displacing through the range within a 1 hour candle. And you can, if you go down to the 5 minute, you can see we're aggressively moving lower. Now I want to look at the morning price action for a second. So overnight here did not do much. It didn't do much really. It had some big displacement moves here, and then a bunch of accumulation until the equities open. So all of these moves here can be considered as accumulation. Price ran higher, manipulated into a 15-minute gap here that was previously held. Something that I was looking out for, whether it's the liquid highs, but it seemed that price did not have these in its highest priority. And price fell short of it and then started bumping lower. So you see the accumulation move here, and then we have this manipulation leg here. We have this imbalance that was inversed here. When I saw this playing out today at 9:30 a.m., I was expecting this price run to be 9 and 2, went to the equal highs, and then started to do whatever it wanted to do after. But realizing now that we might want to engulf this whole move higher here as soon as possible, possibly even today, I realized, okay, today is the most going to be a buy day. Probably going to be filling this gap here, this 40-year gap, and we're probably going to see the low at the end. I mean the end of the range here. So my draw is probably put that back. My first draw is 803.75, and my second draw is 725.25. Anyway, I'm going to do a quick trade recap. I didn't take this trade, and I will say the reason why now. So notice all the mitigation ones here. I have a mitigation on here, mitigation on here, mitigation on here, and then this mitigation on here, which is the one that ended up working out. Now let's pay attention to this one here because it looked very clean. The imbalance was very clear, and there was a nice full imbalance here, and the equilibrium lined up with a 11 a.m. open, so not really open. So if you go back down here, you can notice this mitigation on here, the range equilibrium, and the gap here, and put it to where it lines up with equilibrium, just around there. And then price, in 1 minute, price went into this fair value gap, traded lower, and then we traded back into it. The thing that I did not like here was how we had created equal highs. I would have liked to see price sweep this high, not create equal highs. I guess maybe you could look for it, possibly there was a sweep of this high on the other indices. So let me check the S&P. Let's give them a choice. So in these, there was a pretty decent sweep of NQ and ES, but this is not still, even this happening does not register for the most favorable price action. I would have liked for it to be A plus and for it to be high probability, even though it ended up working out. I would have liked to see it sweep the high and not create equal because of it. Let's check the YM. Yeah, even here on the YM, what was happening that this high here, that's the same as this high, was swept violently and then started straight low. Again, that does not mean for the highest probability conditions. I would have liked to see, I would have liked to see it swept. And then the final gap, the deepest one in discount, was inversed, and then I would have ended up undisclosed if we had swept this high, and I would target the minimum 1 or this range low and one break even there. But most conditions were met, and if I targeted 2 RR, would have fell short of it, and I would be floating probably short. But what trading is about is building good habits. Before you even press the button, you have to have the good habits to be able to sustain a consistent basis. If you see equal highs one time here, and for let's say this example it worked, okay, I'll I'll give you I'll give you props. This whoever took this short here, it worked for you. Good job. But the next time it happens, and if it doesn't work, then what? You see where I'm going? You want to build good habits that allow you to take the same consistent setups each and every single time they show up. If a setup shows like this and you create equal highs at the manipulation of the breaker, then how do I know this price won't come back here and run it up? The only thing between these equal highs and going lower is this small gap here. The price has inverted, I would have been stopped out immediately. If we were down here and price inverses gap, and you know what it said, you know what, go back to the gap. I want to take the equal highs. There's a bunch of liquidity. I would have been obliterated. I would have been stopped out immediately. But if this high was swept, I would have known. I would have known that okay, that's signature. It's telling me almost to go lower. We're in a sell program now. Get ready to take inverses short. And granted, I didn't take it, and that's completely fine with me. And I'm just following my rules. And yeah, that's basically it for the trade recap of all of this. It wasn't really a trade recap, it was more of a missed trade recap. Stuff here. Okay, so let's see where price can be heading for the future. The first thing I notice here is another mitigation here, but what I don't like about this one, there's no high top bring back. I think even at the premium can be applied in 2 minutes, 1 minute. It's a bunch of low resistance with no permanent gaps. The retracement wouldn't make sense. So as for the 1 hour, um, I'm anticipating today just to be a full huge dump lower to engulf this whole move higher. I was looking at the range between this, and I was asking myself, should I consider this gap here? This gap here? And the answer to my past self is definitely not. If you were to consider any gap, you want to consider the gap below it. Why? First of all, because it's a gap, and also the wick is not prominent at all. It basically doesn't have a wick. If you want to see price traded to any gap, it's going to be limited to the gaps, which have really small wicks. If you see, for example, this gap here has a pretty decent wick. But this gap here, if you scale out a little bit, it's basically invisible. Price would want to run down back here and give this price a wick. So a short-term draw you can have is actually the wick of this candle here. And I'm pretty sure that we filled the almost. So I want to mark this off here. Back with my TH. I'm expecting price to fill this gap and then hopefully fill the opening range gap. Once the opening range gap is filled, I'm expecting price to fully engulf this whole move higher and reach down to that low. But you know what I'm liking about what's happening right now is that it's getting engulfed quickly with speed and displacement. That's the most important thing when you're covering order blocks. So if you have a order block move here, so let's say price goes here, moves lower, has a sweep on this high, and then this leg here isn't supposed to be a manipulation leg. We wouldn't want to see price kind of mess around and start to accumulate and move down slowly, and then once it engulfs it, okay, and then you start saying, yeah, I want to see this leg here be used as order block. More likely than not, that leg there is not going to be used in order block. The best case scenario, the most favorable conditions you want to be in, want to be trading, is when price goes up, does that manipulation leg and sweeps that high, and then gets engulfed quickly with speed and displacement. And then you start anticipating this move to be used in order block and start seeing lower prices. And you see that's what's happening here. The only thing that I doubted was yesterday was because we kind of chopped around after we took Thursday's high. So you see, I have a small consolidation candle here, a consolidation candle, small up candle, down candle, up candle. But today, with today's 10 candle, you can see we had that big drop lower, engulfing this price action here, and we're displacing through this gap here. Because if we were supposed to move off of any gaps within this leg range, which gap do you think we'd move off of? Obviously, the most obvious answer would be that we'd probably move off of this gap here if we were truly bullish. But what seems to be happening, we seem to be pushing through it. And it's too early to say whether it's going to respect it or not. But framework and foundation is telling me that this gap is probably going to be engulfed and going to reach this low, inverse the volume imbalance, and then reach for my weekly draw, which is this low here. And if we close below that low, then I'll anticipate even lower prices leaving until here. So yeah, that's really it for the foundation of today. And I'm just going to be looking at the 5-minute and 15-minute to see if price is willing to retrace intermediation blocks. And if it is, then I'll be looking to short at 3 traces and then moves lower. First draw is opening range gap. And if you see actually right now, you can go to 1 minute. See, we have that run higher. So draw equilibrium of that range. We have this run higher. Fail to mitigate discount of the range. And we're also within this gap here as well. Red. So what I'd like to see here is possibly a slight move lower, which we're doing right now, a sweep of the high, and then an inversion, and then a entry towards the range low, and possibly even I could take it down to the open gap to be filled. Okay, so there's that sweep. I don't think the initial run lower was significant because it didn't really manipulate anything. So I'm not expecting much off of this smaller run here. The smaller run here, I don't think it really manipulated anything. I think it was mainly for the purpose of a retracement. And if I would want to see a sweep of another high, I would like to see it close somewhere down here, hang around for a bit, consolidate, and then go back higher and take out that higher. And the whole purpose of that move lower, which is not a quick one like this, it was meant to accumulate orders. Actually, I have a great example. Let me put it up here. Yeah, here. You see here, this is the example that I backlisted. You see we have the first run higher, and then a big run lower here. Fails to take out the range low, which the majority of those has in the unit price side. And then you see what happens is within this accumulation, we accumulate a bunch of orders. And we have low resistance, we have a true time-based equilibrium, we have another run higher, sweeps that high, and then starts from below, displacing the process through this premium, discount gap, and then takes out relatively equal lows. And yeah, that's how every single trade, if you're trading my description and model, should look like. So you see this close here. I wouldn't say it's prominent enough, but it could work if they were, for example, a 30-second inversion, then they have 8.5 seconds type thing. So just have to look into the elements. But you see the range condition here is being kind of spacing close through. You see 14 seconds left on that kind of there. So I'm not expecting it to be respected. But another scenario that could be building up is actually a retracement discount of this bigger dealing range. Especially with these equal highs here. There might be one reaching to that. But I'm not expecting much. So price made a pretty impressive return lower and avoided closing to the gap. But that's interesting to see. Yeah, so I don't like how it's accumulating in this gap here. And the sweeps don't really make sense. They're small intermediate sweeps. So I'm just gonna sit on the sidelines and taper this and see how it plays out. Okay, so I'm gonna be in the stream now because my draw has been met. The opening range gap has been fully filled. The gap here has been displaced through this one as well, because if we're gonna move off a gap, as I just said, as I recently spoke about, if we're gonna move higher, we're gonna move higher from this gap here. I like this move one bit down here. If I see any shorts towards the slow, I'll definitely take it. And that's gonna be it for today's live. So whoever